General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. So, see if the COT is updated. That's what the word on the street is. Let me see. This is saying smart money's position bearishly bought down money. It's also leaning bearish. This divergence makes large speculators look overly optimistic. The latest position, active traders still okay. Commercials are actively hedging net short, large specs are net long, small traders are net short. So among active traders, speculators dominate the long side while commercials are notably defensive. What kind of price behavior to expect? When commercials are significantly net short and large specs are crowded net long, especially at elevated price levels like now, expect high probability of reversal or consolidation, not continued upward breakout. This reflects a mature uptrend, potentially vulnerable to correction. Its commercial positioning showing unusual strength of weakness. Yes, the commercial net short at this magnitude is a bearish warning sign. Commercials typically get it right at extremes. January, February tends to mark seasonal peaks in Nasdaq and broader indices. Come on in this with commercial net shorts. The market is likely at in a late stage rally. That's what it feels like too. Watch reversal patterns, false breakouts, exhaustion candles, weakness in internals. Your phone does not look to tighten stops or take profit zone. This could be a multi-week reversal in the making. Okay, so let me put this in the Notion. The cot is current. And this will be in the Telegram. So let me just do this. Put the long one here and put the short one here. I mean on the day, because I just found out today that it is back current. I thought it was going to be the end of the month. But you already know the link for this page is in the Telegram. If you need to look at that. Monday, and logistics, you can trade Monday. It's been bread and butter Monday. Now, today wasn't bread and butter. Chop City. And ES and Dow is clean. Today is 1.5.26. That's the cut. I don't know. That's the wrong thing. Okay. It's been a minute since I shared the link for this, so I'll put that. No, not the conversation that includes personal information. Hold on. Let me get this part. Summary, boom, boom, boom. Twist like this and then do the link. So grab this and then just grab this. Or, no, do new chat, new Larry. And then copy link. Put this here. Embed this. So that's in there. Boom. Now let's get this 15-minute chart. Flip the colors too, so it's easier to see for dark mode. Some bit right here. I was thinking New York reversal profile to come at least fill this gap. These relative or these equal lows here never got touched. You just had Asia consolidate, London breakout from Asia. We got a breakaway gap here that held, chopped. New York came, chopped everybody. That was super excited about the first full week of trading. Chopped everybody up here too. Gave you one small, cool little move. Well, from here to here is amazing, really. At some levels, I like this code too because it do the The previous day high, previous day low, equal highs relative to breakaway gaps, all that's in there. The buy side and sell side liquidity. I'll put that in Telegram too, but it makes this a little bit easier. Now, the hour looks like 9 cents. And you notice how we came back for this inefficiency? We got this from, this is like a monthly, weekly imbalance. Was it monthly? I just did the charts yesterday. It's weekly, yeah. So we're in this accumulation still. This is actually notable that we respected this. There's still no candle body here. Let's get the picture. Oh, how price closed below weekly volume imbalance. Please buy side. So it wasn't aggressively seeking liquidity or like rebalancing anything from like the M15's perspective. Like that weekly volume imbalance looked like we just ran for that. That might be it. The way price behaved around the level, like was rebalancing or accumulating at fair value, even though it's higher than what price was. We been playing with the same level forever. Like logically, look how much we've been in it. So it started from the bottom. From this perspective, it is something closed here and then it opened here. Friday closed here, Sunday open here. The upper portion of this is actually here. Lock this now. We just play, came through, gapped right back through it, which is crazy. Let's go to the daily. Got inside bar activity. So I wouldn't even think Monday's high or low is safe, in my opinion. We can even come back to Monday's open price. Look at how we respecting this candle still. Yeah, we can come down here. And down candles right here. This is not a protected low. This is a weak low. We need to get a wick. Both of these really. It's been closed. Inside bar. Yeah. No. I would look for Monday EQ to support price for buys. If we are bullish, Monday will be the low of the week. Otherwise, I mean, let's say if we break Monday's low, the pretty pools numerous. I don't see us not getting previous week's low. If we take Monday low, did the framework play out? Nah. I mean, you gotta get an accumulation day in there, but nobody wants that. You be lying to yourself. What's this date? When I learn about pattern narrative for myself, they're good at calling out the chevron. What will I watch for tomorrow? Buys. Yep, that's that for that. Y'all have a good day. Peace.